Hello, traders. It's Friday, November 18th, the last trading day of the week, and options expiration. We're about 90 minutes into trading. Let's take a look at the last pick, CROX. Let me put that chart up, and you can see right here was the video. I loved this breakout right in here. I felt that there was a chance, given that the stock had tried to break out, pull back, try to break out, pull back, try to break out, that this breakout might fail. So we wanted to make sure that half of this long green candle was preserved. If yes, then I liked selling an out of the money bullish put spread keying off of that $84 breakout. You can see how this stock has continued to move higher. I believe it's going to continue to rally. Now, the market, on the other hand, has actually been pretty weak during that time period. So let's do an overlay here. We're going to put up the SPY so that you can see the gray line is going to represent what the market's been doing. You can see here that we had that big breakout after the CPI, and then the market had actually been pulling back. What did the stock do? Grind, grind, grind higher. I love this pick. I think this is going to be a really nice trade, especially selling an out of the money bullish put spread on the notion that this $84 breakout is going to be preserved. This stock wants to move higher, and this is a long-term compression breakout. And we can see the relative strength recently, orange line above zero. So let's remove that SPY overlay and unclutter the chart, and then let's take a look at what the market is doing. Now, the way that this screen is configured right now is you're going to see the 5-minute chart in the background. So when I click on the primary chart, it will update on a daily basis. Then we have the 5-minute chart right here so we can see what the most recent price movement is. And then finally, this chart on the right is the SPY. That's what we're going to take a look at right now. You can see the action today. We had this gap up and then a long red candle. This was a warning sign that we could have a possible gap reversal. Uh-oh, there's another long red candle. We retraced half of this. You can see the wick right here. Half of the long red candle. The first one is preserved. This is a warning sign. We also had a bearish 1OP cross. We are still, well, we're in a bearish cycle, but we do have a little bit of a bullish cross in here. So I'm looking for a gap fill. We've got some tails under body in here, so that suggests support. Let's talk a little bit about the price action this morning, because then I'm going to go into the daily chart and tell you what the macro backdrop is like. So we get these two long red candles, and then all of a sudden we get a lot of mixed candles. You can see wicks right here. That's a bearish sign. It's a sign of resistance because buyers tried to rally it up, and then that was smacked down. So we get a nice little drop. Now we have a tail under the body, and that was pretty much a gap fill. So we get that nice little bullish hammer, a couple bullish hammers in here, but tiny bodied candles. So nothing that we would want to engage just yet. Halfway point of this red candle, preserved, and then blam! Uh-oh, here comes another red candle. Looks like we're going to have another one. If this starts to gain momentum right now, we could have a nasty little gap reversal. But for right now, I'm not overly bearish. The volume has been okay today as well, which the last few days, the volume has been light. So let's put up the 1.0 volume indicator. You can see that it's hovering right around zero. Now on this recent move right here, it's below zero. That tells us that it is below average right in here. So let's see what happens. I still like the long side. Why? Let's go into a daily chart. And when I say I like the long side, I am mildly bullish. I am not overly bullish by any stretch of the imagination. We get this long green candle right here. This was the CPI that came out a week ago Thursday, and you can see how it closed near its high. What we would want to see in confirmation that this downward sloping trend line, which is breached to the upside, that this would be a buying opportunity on a longer term basis, that asset managers would be excited. Well, if that were the case, we would have seen continued volume and a continued move higher, follow through. So there are two important components to a trade. One is the breakout. Why is the breakout important? Because that's what gets the stock on our radar. Doesn't matter if it's a 100-day moving average breakout, a downtrend line breakout, horizontal breakout. In any event, that high volume breakout gets it on our radar. Well, that alone is not enough. Now we're watching it. Now we need the follow through. The follow through is actually where we make money. In this particular case, we had this downward sloping trend line breached to the upside. We had major moving averages that were also breached. So let's put up the 100-day moving average. You can see how we blew through that. And now all of a sudden the volume dries up. Well, if asset managers were absolutely anxious to gobble up stocks on the notion that there was going to be a year-end rally, we would not have seen these little pullbacks in here. We would have continued to stack green candles and you would have seen heavy volume. That's not happening right now. What it tells me is that this move is vulnerable to a pullback. We can still favor the long side if we want, as long as we're above this horizontal. Was resistance, now it's support. Everything comes into play right around that SPY 390 level. And we bounced off of the 100-day moving average yesterday. That was nice. Okay. This morning, if we had a little follow through, that would have also been nice. It would have told us that, hey, buyers are a little bit more aggressive, thinking that, hey, we tested it, bounced off of it. Let's come in and buy this thing up. Well, the early gap higher looked nice, but here we are with a reversal. So that tells you that sellers smacka, smacka, smacka are still engaged and that we're going to see two-sided price action. So if you get a market move, there's your gap down, test it, higher low double bottom. Okay, if you spend too much time at one extreme or the other, you're going to get a reversal. Hey, here we go. Oh, wow, look at that long green candle. Preserves most of it, get a little follow through. Now we have a double top lower high. Uh-oh, probably going to go lower because we've just hit resistance. And there you go. So now, again, you get a little bit of a bounce near the end of the day. This is choppy price action. This is certainly not go-go, year-end rally, never look back, asset managers excited. Inflation has started to wane a little bit, meaning it's not increasing at the pace that it's been at, but it's certainly not coming back in. And a lot of these higher prices are very resilient. It's going to take a long time. That's what the Fed is telling us right now. So the Fed officials are saying, hey, relax. If you're looking for any kind of easing in 2023, forget about it. Right now, we're still looking at a half a point rate increase at the December FOMC meeting, so that's a pretty stiff headwind. Fortunately, the economic data points in the US have remained pretty solid. Job growth, pretty solid. Initial jobless claims, I watch it week in and week out, have remained excellent, right around the 220,000 level. So as long as we have jobs, there's a chance that we could have a soft landing. The Fed is closer to the end of their tightening cycle than they are at the beginning of the tightening cycle. But all of these moves so far in the last 6, 8 months still really have not filtered into the economy. And it looks like we're going to have a recession sometime early in 2023. Hopefully, it'll be the soft landing that everyone's expecting. Hopefully, inflation will tame a little bit. The Fed will start to ease back. Then I think the market might be able to find its footing. But for right now, I'm not seeing a lot to tell me that the market's going to have this nice, robust year-end rally. If anything, we kind of hold this 390 support level and we just kind of chop around because buyers and sellers each have the macro backdrop that they're looking for. There are positives, and there are negatives. The positives, in my opinion, are the seasonal strength. Corporate buybacks are going to be brisk the rest of the year. And we've also got record amounts of cash on the sidelines. Cash is losing value because of inflation. So they're not putting it into bonds, not putting it in the stock market. They're going to try and find a place to allocate money. So those are the bullish factors. The bearish factors are that we could go into a recession. Europe's much weaker than the US. China's having all sorts of issues, real estate, whatnot. This is a time when you're seeing a tug of war between buyers and sellers. This is a time when you want to keep your trading light because the market is just chopping all over. So if you find a really strong stock like Cisco, which will be my pick of the day, or like Crocs, you want to distance yourself from the action and you want to sell premium below technical support on the notion that the market is going to chop around, tick, tick, tick. Time decay is going to eat away at the position. The credit spread will expire worthless, and you'll be able to generate some income while we're waiting for the macro backdrop to improve. So I went in and took a look at some of the stocks that were moving this morning. A couple of my favorite searches. One of them is Green Royal Flush. And look right at the top. CROX is one of those stocks. So we like that one. ABBV, let's take a look at that. Very choppy in here. I went through the list, and Cisco is one that caught my eye. I really like this stock. Now you can see this horizontal breakout right here. There's your earnings, there's your reaction, nice bullish hammer, and continuation today. This is a very important part of the equation. Continuation today. What is the market doing? Down, down, down. What's Cisco doing? It's actually looking pretty dang good. And there's the 5-minute chart of Cisco. You can see it had the early rally up, market selling off, stock holding the bid. I like that. That tells me that there is underlying buying. So we're going to keep the 5-minute chart right here. We'll also keep an eye on what the S&P is doing. You can see red candle, bullish engulfing candle. I like that. So I want to eat into the halfway point of this long red candle, which by the way, I get asked this all the time. Pete, do you use 100 and 200 period moving average on your 5-minute charts? No, I don't. So let's take them off. I only use those on daily charts. Why? Because I'm trying to use an indicator that everybody else is using, and that's what gives it relevance. It's a moving average that everybody follows. That means that those price points are relevant. Not that many traders are using 100 period and 200 period moving averages on a 5-minute chart, so it's less relevant to me. I rely more on price action. I am going to load up a buy order here for the S&P futures because I like what I'm seeing. 1OP has started to bottom out. I'd like to see it start inching higher. I'd like to recover the halfway point of this long red candle right in here. And you can also see that now we have a complete gap fill right here. So we already had tails under body. That's a good sign that there's support forming. Now we get this final selling climax. We get a bullish engulfing candle. Now we have another green candle forming here that's testing the midpoint of this red candle and a bullish 1OP cross. I also would like to get through this high from yesterday, which comes into play, guess what? Right about at that point. So I have to respect this move. I may even wait for us to get through the open of this long red candle. That's where sellers were before. Whap, whap, whap. If we get through it, those sellers are probably going to be gone. That is 394, excuse me, let me hover over that candle. It's 395.40 is roughly where we're looking at. So yeah, I'd like to buy in here. Let's take a look at Cisco now that we have our market bearings. Let's take a look at what it's doing. I love this horizontal breakout right here. It's had a great post-earnings reaction. I like this 200-day moving average. Could we sell a bullish put spread right underneath this? We could, but that's a little too close to the action for me. I'd like to have a little bit of buffer just in case the market pulls back. The stock might lose that 200-day moving average and try and test this 45.75 level. So 45.50 would be kind of ideal for me. So let's take a look and see if we can sell a Cisco 45.50 bullish put spread. Probably have to go up maybe even 3 weeks on this because Cisco is not a very volatile stock. So we're going to have to go out of the money. And let's bring this back into view. So again, that $46 level is kind of one that I'm watching. Let's see what we've got in terms of premium. So $1 between the bid, $1 between the strike prices, and that spread is currently 15 cents bid, offered at 21 cents. I would like to get 20 cents for this spread. That means I have to put up 80 cents in margin for it. If I bring in 20, that's a 25% winner in the course of a few weeks. December 9th is the expiration. So yeah, it'd take about 3 weeks or so. That's a nice return. That's a spread that I would be considering right now. And we're pretty close to that 20-cent credit. Get a little bit more of a pullback in the market. We get a tiny little pullback in the stock down to the 200-day moving average. 200-day moving average is at 47.40. So that'd be about a 30-cent pullback in the stock. You would be able to get filled on that spread. I like it. And $46 puts us down about here. So we've got that really nice D1 support right in here that we can lean on. That's a spread that I like doing. Let's take a look at a few others. Let's see if we can get a trade-off on the S&P 500. And I'm going to just flip through a couple of other charts. Right now I am neutral to very slightly bullish. If we take out that SPY 390 level, we're going to continue to sink lower. So we need to be able to hold this level, and we need to hold it well. I am leaning on seasonal strength. I don't swing trade from the short side in November and December. That was a tough lesson for me to learn, but I learned it many, many years ago. It's one of my trading axioms. I can day trade from the short side all I want, anytime I want. But as far as swing trading, I should not swing trade from the short side in November and December. The buying pressure is simply too heavy. Asset managers love marking up their portfolios. You can see nice little light volume rallies right into year end. It gives everybody a warm fuzzy. They feel good about the market. People start bringing money back into the market. That means that asset management fees go up. So there are reasons to explain why this happens. And now you can see we're starting to stack some green candles in here. So I'm getting pretty interested in buying. You can see those same buyers there, bullish engulfing here, are still there now that we've filled the gap. This is also what I call a marginal new low. What do you mean? Well, this was the low, not including those tails. This was the low, and this long red candle and this next leg lower just barely got lower. That's also a sign that support is starting to form because the market can't go lower. If it drove all the way down in here, that would be a nice big leg lower, and it would tell me that the selling pressure is still very heavy and that I need to be careful on long positions. So I'm going to be buying right in here, and let's take a little buy. I'm going to put a bid in a little bit below the ask currently. We'll see if we can get filled on that. And now you can see we're starting to chase through this little high right in here. So I do like this. And let's see where we currently can get filled on that. I'm going to continue to raise my bid here. Right now I'm a 39.68 bid and I just got filled. So I'm going to post that, Phil, in the chat room so that everybody knows what's going on. And that's kind of how I see the market unfolding today. Lots of choppy price action and not a huge amount of direction either way. We did have a nice little rally before the open this morning, up 35 points. Well, any notion that the market was in go-go mode was dispelled very quickly. If you get a nice directional move in either direction, we know support tested. We're going to go the other way. Resistance tested. We're going to go the other way. That's what we should expect today. So we've got support here. Yeah, there's a good chance for us to rally up. I think Cisco's going to do well. Let's take a look one last time at that Cisco chart and see what the 5-minute chart's doing. You can see how Cisco is trying to get through the high of the day right here. It's not a big mover. It's a slow moving stock, so it's kind of a grinder. Like it on a swing basis. Love selling that out of the money bullish put spread. Let's take a look and see if we can find a couple of other stocks that look good. That way you'll have a few other stocks that you can consider. And all I'm doing is flipping through charts right now. So I'm looking at the daily chart, then I'm looking at the 5-minute chart. LMT was one that I really liked also. And this is a bullish flag that's forming. You can see this fantastic breakout here. There's your earnings announcement. Stock rallies up, gets a little ahead of itself, pulls back. This long red candle, we're through the halfway point. We're going to challenge the top of it. This is a bullish flag formation. Good chance that that stock will run up to the high of the year. What would I do with this information? I'd be looking to sell a 462 put, probably take me down to the 460 strike price on LMT. So let's bring that up. That'll be the final analysis that I do today. So I'm just going to bring up LMT. I'm going to take a look. We'll go out a few weeks. And yes, they have announced earnings. We always sell spreads that expire before the earnings announcement. And we are keying off of that 460 price level. So let's see what we can get. And in this case, we're going to have to do a 460, 455. The red line is 1 standard deviation. The blue line is 2 standard deviations. So we're kind of straddling it, which is fine. It means that we're a good distance out of the money. And that spread is currently trading very wide bid-ask spread. 60 cents bid, offered at $1.50. Could you get $1 for it? I don't know. Might as well try. Put it out there, see if you can get filled. I believe that you're going to see LMT retain this bid price, this support level right here at 460. In fact, I think the stock's probably going to continue to grind higher and challenge the high. So yeah, I like LMT. Okay, what the heck? Let's take a look at a couple of others. Pepsi is one I highlighted way back in here. That stock looks good. That was in a previous video. Just scanning down to see if any tech stocks are starting to pop up. FSLR, that looks really nice. Bullish flag right there to the upside. Yes, FSLR, that's a nice looking stock. MPC, Marathon Oil, that is a refiner. J&J, I'm just trying to look around. J&J, that's a nice little breakout right through there. This is my green royal flush search. It has a buy signal across all time frames. So yeah, I like that as well. We're going to Pop Bull, another one of my favorite searches. We've got some retailers coming in, ROST, a lot of retailers. Jazz, that is a biotech company. Nothing going there. Just going to take a quick look down to see if there are any big name stocks that might be of interest to us. I've shown you enough. I'm going to try and do 2 videos per week. That is my goal. I've had a lot of things going on in my personal life. I've also been working diligently on new features for Option Stalker Pro. We've got some exciting things coming up. So I should have time to get at least a couple videos out. And then hopefully within the next few weeks, I'll be able to do some live events, kind of looking to schedule those for Wednesday evenings. Thanks so much for watching. Please leave your comments. I'll make sure to respond. Trade well. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.